Good evening and welcome to the second episode of Heritage Capital Wealth Talk. In our first episode, we asked why Romania cannot afford to remain just a country of savers. Tonight, we take the conversation further into the global forces that shape risk, debt, and opportunity. Our guest is Rachel Ziemba, one of the foremost voices in geo-economics and sovereign risk. She built crisis scenarios alongside many famous people like Roubini that later become a reality. Her research on sanction, sovereign debt, and financial resilience is followed by the world's most influential investors and policymakers. When the IMF, the ECB, or sovereign funds prepare for shocks, Rachel scenarios are often on their desk. And tonight, she is here, not for Washington, not for Brussels, but for Romania. Because Romanian families, entrepreneurs, and professionals deserve to hear directly from those who understand how global shocks cascade into local risks. We will discuss Ukraine's war and its spillover at Romania's borders, Europe debt spiral from France to the UK, and its lessons to us, how trade wars, tariffs, and fragmentation will reshape small economies, and most importantly, how Romanian families and entrepreneurs can prepare before the next domino falls. This is not a theoretical debate. This is about clarity, protection, and the future of Romanian wealth. Rachel, good morning, and thank you for being with us.
Thank you for having me. It's a real pleasure.
Thank you so much for being again with us. And we have a couple of questions we need to address to you based on your experience, so you can at least help us, and Romania is listening to you. First, I want to go, Rachel, into the global geopolitics and the macro risks. You specialize in scenario planning, basically. What are the top 3 global risks in the next 12 to 24 months? And how should countries like Romania interpret them?
Yeah. So I think one of the biggest, the big macro risks are around debt and debt dynamics, which we'll get into. Also reshaping trade flows. This is not a new risk, but it's one in which it's very difficult for businesses to plan right now, particularly as you have shifting rules out of the United States and companies adjusting. And Romania and Europe is also caught in the middle between measures that are being taken in China. So fiscal, sort of the trade dynamics, and also just this sort of question mark of scrutiny of institutions, including central banks and the like. And you asked me for 3, but I'd add a 4th, which is the way in which partly implemented sanctions and export controls are setting up new quasi-illicit markets that increase the risk of liabilities for business to engage in. That's something particularly relevant for the resource markets, but it is more broadly an element of banks are being expected to check their supply chains, the supply chains of their customers. We have the European Union expecting to do more on the sort of sanction side. So I think this is really reshaping financial markets and creating additional costs to cross-border trade and financial flows.
So basically, Rachel, if I can interrupt you 1 second, we have a lot of risks with the way we understand, but Romania being based next to the border of a war between Ukraine and Russia, and on the left we have the European Union now with their own problems. So how can Romania interpret these risks? Because we are not an island shielded from risks.
No, exactly. And I would say nowhere in the world really is an island shielded from risk. So to some extent, Romania's decision to embed more in the European Union, to be part of these German, especially linked supply chains on the manufacturing side, is sort of an important anchor for economic policy. We talked about risks, but there also are opportunities and areas of growth. One of the biggest ones investors have been trying to digest is this new pledge for greater defense spending, more infrastructure, maybe some more expansive burden sharing within the European Union, or at least within the Eurozone, of which Romania is sort of on the accession path, but not fully a part of. But I do think Romania, like peers like Poland and others, is in a position as European countries are looking to develop the defense industrial base and the like. There's some scope to further develop and leverage some of the infrastructure. Romania, as you say, sits on the Black Sea. The Black Sea is a war zone, the Romanian part of it. And there have been both challenges. Black Sea tourism and cruises is not a sector that can be developing right now. And I don't mean to make light of that in a conflict where people are dying every day. But if I look back 12 years ago, going to Crimea, participating in Black Sea economic analyses, this was a very different dynamic. But so there are challenges there. But I also think that Romania has been part of Ukraine rerouting its food export trade, right? The use of the Danubian ports, the creation of sort of new supply chains has also, it's had pluses and minuses. So,
Rachel, what I wanted to say, for example, like after the meeting of Donald Trump and Putin, and whatever decision that they made or they didn't make yet, what do we think about the spillovers on Romania in terms of how can we prepare ourselves? Do we consider all the risks like financial, energy, security spillover on Romania are risks, or can be opportunities for Romania to benefit from this?
Yeah, so I think right now, out of the U.S.-Russia sort of dynamics, there are probably more risks than opportunities. And the risks are as follows. The fact that we have Donald Trump, who talks tough on Russia, but would like to normalize ties. And a European Union that, if anything, is preparing for its next sanctions package. So we have a dynamic where the U.S. and Europe, U.S. and some of its allies are a little bit are more out of step, right? We also have a dynamic where we'll get to this, I'm sure, but U.S.-European trade relations, there are additional barriers and frictions. And I think there's the other backstory, not just relating to the war, but the other backstory of volatility, not just on trade, but on interest rates and on financial markets.
But can I ask you something before we enter into the debt and all interest rates?
Yes.
What is BRICS from all of this, and what is Romania, where it's the position of Romania in being in the Eurozone? And you know exactly what the BRICS and the how people are saying the dollar will lose its like being the most the biggest currency in the world, and the BRICS are preparing for clearing houses. So do you think, based on your expectation, in 5-10 years, we're going to see another clearinghouse, another new currency in the world?
Or maybe the scenario I'm looking to is whether we have multiple competing clearinghouses, which
Absolutely.
might be some good opportunities for traders. It might be some good opportunities for fees, but will probably add a lot of transactions costs. So I think we're unlikely to see, there's not really an alternative. Financial markets, sometimes we talk about TINA, the acronym. There is no alternative. There really isn't yet an alternative to the dollar. The depth of its market, the sort of liquidity, the fact that the U.S. is very good at issuing financial assets, sometimes to its detriment, if we think back to 2008 and even today. But I think we'd see more multipolarity, multipoles and the like. Now, I spent a lot of time this week, as many people have, looking at the announcements out of the Tianjin meeting of the Shanghai Cooperation Organization. Now, that's a group that overlaps with the BRICS. It includes some members of the BRICS and friends of the BRICS. What I noticed there was, and there was a lot of press coverage. It said, oh, this is a new front. This is an anti-US, anti-West alliance, and they're going to do everything together. And sometimes financial markets and the press, they like to have a big narrative. And they're forgetting that 2 months ago, they said, oh, the BRICS are dead because not many people showed up at Rio. And so the answer is probably not that the BRICS are dead, nor that this this China-led order is taking over, but one that's a little more complex. Now, what I think it means, there will be more focus on new payment systems. We'll continue to see digital assets and even assets like gold, sort of benefiting in this environment.
Yes.
Now, of course, it's had a really big run up as it is. But I think that only reinforces the fact that having some allocation to gold in a portfolio and some digital assets, even assets like stable coins in a portfolio can make sense. But anyway, I'm getting ahead of myself.
No, this is what we are recommending, give it to clients in terms of like diversifying and having some assets like this. But if we go back to why I'm saying, because usually now what's happening in the world is like a lot of debt, rising debt levels in Europe and the US, and now what we see in France, UK, we have a huge like debt. It could be a debt spillover all over Europe. So my question to you, Rachel, is Europe like sleepwalking into a sovereign debt problem? And if one of the countries that they are asking, or they will ask the IMF help, if something happened there, what lessons does that hold for Romania? And do we have a spillover to Romania as part of the European Union with a huge budget deficit?
Yeah, I do think the fact that Romania has a large and expanding budget deficit is a concern. And looking even at the sort of the medium-term plan, it's a pretty aggressive planned fiscal adjustment. And I often look at the aggressive fiscal adjustments, and I'm a little bit skeptical that they happen. Now, look, we've seen in the last couple of years the story of Argentina, which actually did an even more aggressive fiscal adjustment. But think about the decades that led up to it in Argentina so that they kind of got to rock bottom where they were willing to experience that pain. I'm a little more skeptical that Romania and some other countries can do that adjustment. So look, I think the focus, you're in another moment of concern about sovereign balance sheets, concern about overall balance sheets, and again, concern about where the growth and productivity in Europe is going to come from. Mario Draghi not so long ago came out with his, pretty scathing report about what was needed to boost productivity and the like. Only a few of those measures are sort of being implemented. I think a big question going ahead is going to be what degree of burden sharing there's going to be, not just on defense, but also on the fiscal dynamics. What is clear is that countries like France are really big, and the ECB might be able to do a variety of things to support smaller countries, but that's much harder to do with France. Now, France is facing a real, political, sort of deadlock on this.
Absolutely. Next week, I think we're gonna have a vote next week.
Exactly, and hopefully, this recent market pressure will focus their minds and the like. France, it tells a story of debt levels creeping up, debt service creeping up. Where Romania is concerned, compared to some of its peers, debt levels are still not high. But it is the deficit, and it's the fact that debt service costs are creeping up, and it's the fact that Romania is linked into the Eurozone and its, monetary dynamics, but doesn't fully have the sort of backing of the ECB necessarily. The markets could put more pressure onto Romania. Now, that being said,
basically, in your opinion, if something happened in terms of like politically in France or UK or whatever, we will feel some shocks in Romania.
I think that's right. Typically, when there are shocks, particularly within the Eurozone, markets will test the resolve of countries that also have fiscal and external, sort of external vulnerabilities. And Romania, I mean, look, Romania's currency has been pegged to the euro for a long time now.
And at one time,
Virtually. And so it's no longer necessarily a new thing that that investors think is a wise thing to test. But I would expect that the sort of fiscal dynamic to come under pressure. Also, I noted even in the first half of this year, the external deficit widened, the current account deficit widened, and the quality of financing went down. Some of that was a story of a little less FDI.
absolutely.
Look, so crisis or not, I'm not sure, but definitely vulnerabilities rising, and this issue also of where the growth is going to come from, and the dynamic. Now, I will say that Romania being tied into these supply chains, these manufacturing supply chains in Germany, probably puts it in a stronger position than if it was acting alone. Acting alone would be more vulnerable to the U.S. and China setting the rules. Being part of the Eurozone, being part of the European Union, meant that Romania comes to trade negotiation tables sort of as a group, not as an individual. And the like. And then the other thing, I guess, that I'm watching here still is to what extent Romania can increase trade with some of the broader regional partners in West Asia. So, for example, with countries like the UAE that have been involved in investing more on the energy side and the like. So I think there's good news and challenging news.
But Rachel, basically the red flags that you can, which red flag will be the, I don't know, the most important for Romania, like a sovereign borrower? Which red flags stand out the most? The most fiscal deficit, over reliance on domestic savers, the currency being pegged. Which one do you think, in your opinion, is the most important red flag for Romania as a sovereign borrower?
Yeah, I think they're linked, right? The fact that on the one hand, it can be good that you have a sovereign, a domestic investor base. It helps in that way. The challenge, though, is that if there's more and more debt issued, then it can crowd out other investment of the private sector, investment equities. Now, it is interesting. I took a look at the dividend yields and the sort of the likely dividend payouts of Romanian markets versus the interest rate, and the equity yield, so to speak, still look pretty attractive despite some of the run up. So this is not a story of a massive financial repression sort of story, but it is something to watch. So, but look, I think ultimately the biggest kind of red and orange flag that I'm watching for is the fiscal deficit and what's driving and that financing of the deficit, both domestically but also internationally. The fact that there's this, in a sense, been a policy uncertainty that has weighed a bit on the FDI, on the sort of longer term investment trajectory. That's not unique just to Romania. I think there's been a number of investors, holding their cash. The other thing I would be watching for is the degree to which Romania can play a part. If we think about global equities, we've seen in the U.S. context, we've continued to see a big run up in anything linked to AI projects, whether it's the power infrastructure associated with it, as long as it's not wind or solar in the U.S. context. I think in Europe, there's much more of a focus of adding whatever is sort of more resilient and domestic. But
Rachel, from what you're saying, I want to go back to, like, a lot of countries, like 3-4 countries, they suffered the same when government were leaning a lot on the reliance on some state bonds. So what similar warning sign we can learn, like, from whatever, Argentina, Greece, Cyprus, Lebanon, a couple of countries that you know exactly the crisis, what happened. So do investors or families, they should see some warning signs before they act, or because if they act late, they will lose exactly, it will happen with them the way it happened with other countries.
Yeah. So I think looking at examples like Greece is very important and instructive, especially being part of Europe. I think the example of Lebanon, which you know even better than I, right?
Yes.
Some of these crises are all unique unto themselves, but they have some common flags. I watch really closely fiscal, sort of not only the level of debt, but the debt service costs. What element, one of the warning signs I watch for is the amount of the debt service costs to sort of revenues that are coming in. One of the challenges in Romania, like some of these other countries, is this difficulty of getting people to pay taxes or diversifying the revenue base. Absolutely. Now, it's challenging if you collect more taxes, then maybe people don't invest. I mean, it's a challenge.
It's a balance. It's a good problem.
But it's a balance. And that's where I think some of the focus of both, the IMF and interacting with Romania, but also the European authorities and interacting, a lot of it is about increasing transparency, increasing collections, providing a more predictable environment in this way, and also continuing to improve just the financial infrastructure, including to sort of avoid some of the sort of gray market dynamics. So yeah, but the warning signs I would look at the current the external balance and how it's financed, the debt service costs, also the the growth dynamics, and then I think the political dynamics are really important. Political, not just stability, but is this an environment where government can push things through, right? As we said, there's a pretty aggressive medium-term fiscal adjustment plan. It's easier to pass something that makes you do the hard work in the future. And then in the future, you come back and say, well, we don't want to remove those tax cuts, or we don't want to sort of raise those revenues. So I think those are the things I would be watching. I think the other issue is to what extent Romania can partner with neighbors, can attract some of the investment that is going to be part and parcel of developing, greater sort of European growth at a time where, China is importing a lot less manufactured goods. They're exporting a lot more. There's downward pressure, on prices. The U.S. is looking inward and trying to import less European goods. So I think all of this means that, in a sense, the positive that Romania has is a relatively sizable population and some domestic demand. The challenge is that most of that domestic demand is supported by either work in other, in a work abroad, or sort of revenues abroad.
Yes. So basically, Rachel, well, you saw like austerity programs in different countries, and what we have like a very tough austerity program in Romania. Do you think, based on your experience, when we're gonna feel like this, when not the population will feel it directly in terms of taxes, in terms of a lot of things, but when we're gonna have adjustment, for example, at the budget deficit or the measures that were taken by the government, and what I understood from you as well, if we don't have not stability, if we don't have continuity in terms of like the taxes that this government put, we don't need the other people when they came after to stop these, because we're gonna go back to where we were. So how do you see it?
Yeah. So look, I think the challenge with tough austerity programs is that they hit growth as well, right? So you have fiscal cuts, and some of it, you maybe have. So that becomes the challenge, and that balancing act. Now, I will say that there's a plan for some tough austerity, but that hasn't really happened yet. As I say, it's easier to plan that next year or the year in the future there would be even more so. I know that there have been previous examples of tough austerity programs in Romania. It's still a country where market pressure is a factor. I think some of it also will be the importance of continuing to push on economic reforms, structural reforms to make it both easier to open businesses, easier to sort of, capitalize in this area and look for new investment and new investment partners. The challenge is there's a number of Southeastern Europe sort of neighbors that are also competitors who are also trying to be part of this, this dynamic. And a broader challenge across Europe is that energy costs and resource costs are likely to remain more elevated, at least than in some other regions, like definitely compared to the Middle East, but also even compared to the United States, for example.
One question, Rachel, just a lot of economists, a lot of people in Romania are expecting that we're gonna have a recession now. We have a huge inflation. Usually, when you have a recession and a huge inflation, we have a stagflation. Basically, what can you advise or recommend for people, families, entrepreneurs when a stagflation is here? What does it mean? So what does it mean? That we might see a credit crisis. Hopefully, it will not happen from the bank giving credit because there is no growth, there is austerity, there is inflation, and people, they don't know exactly what to do. So what do you recommend for this? Because usually these kind of things, you see them in the books, stagflation plus credit crisis, usually it should not happen together.
Yeah. No, I think that's right. So I actually think to the extent that there really is a credit contraction, it probably will diminish the price, the price pressures in that context. Some of it is that it's in this environment where I think we're going to continue to see more pressure on the US dollar versus some of the G10 currencies. And Romania, of course, is pegged to the euro. You're going to have a competitiveness sort of challenge because the euro is relatively strong, but you might actually have a bit stronger buying power. So that might be, an element. Some of it goes back to the suggestion we were alluding to before, which is thinking about some hard assets and some the like. Often in stagflationary environments, real assets, including even property, do fairly well. Equities sometimes can do okay as growth related. Some of it depends on
basically
diversify interest rates. Well, diversify the assets. I think the real challenge when you talk about diversification is that it's important to look closely at the correlations, because sometimes assets that seem uncorrelated are more correlated. In a real credit crunch and credit crisis, right, a lot of assets are correlated. But yeah, I think the stagflationary environment is a risk. I think what's probably more likely is one where growth is weak, but there is enough, sort of the price environment is such that there's still an ability to keep relatively low interest rates. I would see, the challenge that the Central Bank of Romania has is, as you say, that inflation has remained more elevated than in the Eurozone. There's not been as much space to take advantage of that relative space, and the like. And that trend is, and given what we just said on the fiscal side, that and my assumption that maybe the fiscal adjustment will be more modest, that restraint, the difficulty of doing monetary easing is likely to remain with us. Some of the new projects, including diversifying power sources and the like, I'm thinking about projects to expand renewable energy, projects to expand more domestically sort of sourced energy, and to become more efficient in that energy use, I think are going to be an important part of it. Central banks often will look past the the energy related and commodity related, price effects. One of the other things I'm watching for Romania and other countries is also the food price dynamics. Romania, of course, benefits because it can grow a lot of food domestically. which put it a bit in competition with Ukraine, for example,
So
and the like. But that as a middle income country, like Romania, I think really is in a position where food is a bigger part of the inflationary basket and the like. So
Rachel, what I wanted to ask you before we thank you for your presence, I want to ask you just as a last thing. Uh, we need to know that Romania is not an island. People should be ready for shocks, should be prepared themselves. And based on your experience, preparation for shocks or being prepared is the most, I think, the best weapon to fight anything that can come to our plate here in Romania or what we have inside. Because what we have is huge, what we have outside is big.
yeah,
So being between both things, we need to be prepared.
yes, I think that's correct. And that's where pushing, forward on credible fiscal adjustment plans, on continuing to sort of strengthen and clean up, banking systems, of implementing more compliance measures. We haven't talked much about the business and other headline risk there, but in an environment where European authorities and global authorities are going to be looking with more scrutiny to potential, whether it's sanctions exposures or a variety of other things, that's the kind of headline risk that could add, sort of pressure and interest rates. I think it also just means um, taking the opportunity, not to have short term, to reduce the reliance on short term variable, sort of variable debt, and just more generally to um, take, sort of consider where, sort of where the growth opportunities could be from a family perspective. It does mean thinking about where you want to sort of hedge from a sort of currency, from a currency basis, having some degree of these other, these other assets, these alternate currencies in the portfolio could make sense, and the like, and just sort of staying put as a country, or otherwise, the risk is that you drift into, at a minimum, sort of a weak outlook and potentially a crisis. I do think that the too big to fail element of particularly the French crisis is such that both it will likely focus the French minds on doing what's necessary, but also, if anything, the political imperatives in Europe of having a strong backing in the context of this war that is still going on are going to mean that there will be a little bit more burden sharing.
Absolutely.
But
Okay.
there could be shocks. There could be stresses and shocks along the way. And we know in the European context, smaller countries are often held more to the Growth and Stability Pact or its
Absolutely.
commonalities than the
Absolutely.
bigger countries, right? And
Absolutely.
that's what the French crisis in part is about, right? It's been
I know.
a looming issue there.
Rachel, I hopefully next time we're gonna see you here, or we're gonna have a call or a talk with you on with us. Hopefully the things will be better in Romania and outside Romania. I want to thank you for your presence, for your
Okay.
advices, for all the recommendation and your analysis, and hopefully we're gonna have one day a piece on Romania from you, because we want to hear your advice and your analysis about what's happening with us. Thank you so much, Rachel.
My pleasure. I'll make sure to write about it, and our discussion here has sparked a lot of ideas. So I'll have to
Thank you
write
so much.
about it too.
Thank you so much.